I personally have been buying tons of shares of the JP Morgan Equity Premium Income ETF known as JEPI for my long-term dividend growth portfolio over the last few years. Now, as I'm filming this video, I've amassed well over 1,000 shares of JEPI throughout my multiple portfolios, and just for some reference, I'll post 2 screenshots right here on the screen of some of my JEPI just to give you an idea. Now, I've been buying JEPI for a while for multiple different reasons, but for the most part, obviously, the fact that the covered call ETF offered a nice high starting dividend yield with the potential for some modest growth along with it definitely intrigued me as a more income-focused, dividend-focused investor, which is of course why I'm currently holding on to so many shares. Now in this video, we're going to dig deep into the JP Morgan Premium Income ETF known as JEPI, show you all exactly what the ETF is and how it works. Then lastly, towards the end of the video, I'm going to tell you, I'm actually going to show you exactly how much I earn in dividends from JEPI and how much JEPI's paid me over the last year or two. Now stick around, drop a like down below, and comment to me if you also own some shares of JEPI. Now, before anything else, let's head over to the JP Morgan website and learn a little bit more about JEPI and how it works. So here in the JP Morgan website, it says seeking consistent premium income with lower volatility. The JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. It also says that the portfolio managers with over 60 years of combined experience investing in equities and equity derivatives. Now, the defensive equity portfolio employs a time-tested, bottom-up fundamental research process with stock selection based on a proprietary risk-adjusted stock rankings, and also discipline option overlay. Implements written out-of-the-money S&P 500 index call options to generate distributable monthly income. So in simple terms, the JEPI ETF invests in a basket of stocks that are selected based on certain criteria. Things like market capitalization, liquidity, and financial performance. The fund manager then sells call options on a portion of these stocks which generate income for the fund in the form of premiums paid by the buyers of those options. Now, if you're not familiar, call options are contracts that give the buyer the right, but not the obligation to buy an underlying stock at a predetermined price. Now, this is known as the strike price. On or before a certain date, this is known as the expiration date. When the fund manager sells call options, they receive premiums, and these are paid by the buyer side. Now, when it comes to JEPI, these premiums generate additional income for the fund. So simply put, the managers of JEPI buy into a basket of stocks, sell covered calls on those stocks, and wait and see what the market's going to do that month. Now, depending on how the market trades within that given month, depending on how the volatility is, and if some of the shares in the fund get called away or not called away, all these different factors are going to determine what the JEPI ETF's dividend is going to look like. And because of this exact reason, this is why JEPI's dividend history looks the way it does. At times, JEPI's paid out over 50 cents per share per month, which is well over a 10% yield annualized. And then at times, JEPI's paid as low as 26 cents. And as you can see, pretty much everything else in between. So now that we're all up to speed with how this ETF works and what it has to offer, looking at JEPI's performance, year to date, the ETF is actually down 1.54%. On the last year time frame, it's down around 1%. And on the max time frame, since around 2020, JEPI's up around 4.76%, which honestly isn't all that great considering during this time frame, a lot of other ETFs have seen much better performance. But of course, don't forget, this is not including dividends. Now, one of the things I do like about the JP Morgan Premium Income ETF is the holding breakdown, although just a side note, I do sort of like the holding breakdowns better of JEPI's brother JEPQ. But JEPI's holding breakdowns is 17% technology as the largest position, which I like because of course technology does have more growth potential. And even though JEPI does use the cover call strategy, which means this ETF is never really going to jump up in price all that much because the upside is capped, technology and healthcare do still offer some decent growth. The next biggest sectors are things like industrial, consumer defensive, financials, consumer cyclical. Then we have a small amount of utilities, communication, basic material, a small amount of real estate and energy. Now, JEPI's top holdings are things like Amazon, Microsoft, Progressive, Adobe, Train, MasterCard, United Health Group, Visa, Accenture, CME Group, and others. Altogether around 138 different holdings, of course with that option overlay. Now, it wouldn't be fair to look deep into JEPI but not talk about the dividend, and JEPI is currently offering a trailing 12-month 9% more or less dividend. Now, I say that with sort of a less than impressive tone considering back when I first started buying this ETF. I think I bought some of my first shares late 2021. This ETF was paying anywhere from around high 30 cents per share per month, even up about 50 cents per share per month. And now just as of recently, we've seen dividends as low as 29 cents per share per month. This was back in July. And as of the last few months, around 36 cents per share per month. Now, a 36-cent dividend for an ETF that costs only around $50 or $55 per share isn't necessarily horrible, but that being said, there are better options out there these days, especially if the dividend doesn't move up from here. Now, it's also important to note that when buying into an ETF like JEPI or like other covered call ETFs, the amount of dividends that are paid on a monthly basis are never going to be the same, most likely, and this is due to things like volatility, which is pretty much going to make this ETF's dividend sort of on a month-by-month basis. Now, the last thing I wanted to do is show you some of the dividends that JEPI has paid me in just one of my dividend growth portfolios. I do have multiple portfolios across multiple brokerages for insurance reasons, but just for example, so far in 2023, this one portfolio that I hold some shares of JEPI in has paid me $315 as of January, in February, $283, back in March, $268, in April, $297, in May, $283. Then we had some lower payouts back in June, $245, $241 in July, back in August, $194, which was a very, very low one. Then back in September, $226. Then as of recently in October, $243. So as you can see, holding the same amount of shares, really depending on how much that dividend is declared for on an ongoing basis, is really going to change the amount of income like an investor like myself is going to get paid. And luckily for me, as of right now, I don't rely on these dividends for, say, to cover a bill or anything. I'm using these dividends for right now to reinvest into more shares of JEPI or other ETFs, honestly. I've been buying a lot more of things like SCHD as of right now. But I say that just to bring up the point that if an investor, for whatever reason, was to say retire and use the JP Morgan JEPI ETF as money they're going to use to cover a bill, it's going to sort of be dangerous because you never really know exactly what you're going to get on an ongoing basis. Now, of course, like any investment, the JEPI ETF is not going to be suitable for every single investor. The investment vehicle that JEPI provides is for those that want to have income on a consistent monthly basis paid to them, and also those that are willing to maybe take a little bit less long-term growth potential in order to receive income a lot sooner. So for me personally, the reason I bought around $75,000 worth of JEPI over the past few years is because a large portion of my portfolio does have growth aspects to it. What I mean by that is I invest in things that are going to appreciate much more in price in the long term and not pay me as much in the short term. So the fact that JEPI makes up maybe 3 to 10% of my overall portfolio as of right now, I like the consistent income. I like getting paid every single month from the various JEPI shares that I own. I use that income to buy other names like SCHD or other single stocks that I want to hold on to long term. So although the JEPI ETF is by no means the best investment out there in my opinion, I do think that it has a place in many different dividend investors' portfolios. But when it comes to the JP Morgan Equity Premium Income ETF JEPI, I want to hear from you guys down below. Are you currently holding onto any shares of JEPI as of right now? And if so, drop how many shares in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.